Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. Beginning this week, official negotiations on tariffs between South Korea and the U.S. kicks off as both sides aim to address the ongoing trade tensions. The two countries have agreed to focus their discussions under four main sectors: tariff, economic security, investment cooperation, and notably exchange rates. While the U.S. seeks a fast-paced resolution, South Korea is calling for a more measured approach, largely as the nation awaits a snap election in June. Now, this timing and the differing priorities raise critical questions about how the acting government will navigate these high-stakes talks with the United States. So for more on this, we connect to Lee Yoon-soo, professor of economics at Sogang University. Welcome, Professor.
Thank you for having me.
And also joining us is Choi Sang-mi, professor of business administration at Ewha Women's University. Great to see you.
Good evening.
So let's start a discussion with Professor Lee first. So during the recent 2+2 trade consultation, the inclusion of exchange rates actually as a key issue was kind of unexpected. How significant is this for South Korea's economy, and what kind of impact could this have on the country's currency policy and broader strategies?
Yeah, you are right. The inclusion of exchange rates in the recent 2+2 trade consultation between South Korea and the U.S. was indeed unexpected. It shows that the U.S. is placing greater focus on currency issues in the trade talks. Clearly, the U.S. is concerned that South Korea may have kept the won undervalued to support its exports. However, it's important to point out that South Korea has made efforts to prevent the won from weakening too much, not strengthening. Both the government and the Bank of Korea have worked to stabilize the currency, aiming for trade practices and avoiding large fluctuation in exchange rate. So there is a clear misunderstanding that we have to clear it out. Still, the development is significant for South Korea. If the U.S. pushes for a stronger won, it could hurt the price competitiveness of Korean exports, which are a key part of our economy. Also, trying to support the won could require interest rate hikes or drawdown from foreign reserves, both of which could add pressure to the domestic economy. So in response, South Korea needs to strike a balance, maintaining export strength while addressing U.S. concerns. That may involve showing more transparency in currency policy and engaging in diplomacy to explain the real reasons behind the exchange rate movement.
Right, so this definitely seems to be raising the stakes. Now, there's also speculation that the U.S. might push for a second Plaza Accord in a bid to weaken the dollar. Professor Choi, could you explain for our viewers what this is and what effects this could have on Korea's foreign exchange stability?
All right. The original Plaza Accord in 1985 involved the major countries working together to weaken the U.S. dollar to fix trade imbalances. If we see a new Plaza Accord, the Korean won could rise sharply, making Korean products like cars and electronics more expensive overseas. For example, companies like Hyundai and Samsung might find it harder to compete with Japanese or European firms. So to protect its economy, Korea would need to step up efforts to stabilize its currency and shield exporters.
Many would maybe not remember the original Plaza Accord, but this impact on global currency values seems to be quite massive. Now, if the U.S. continues to link exchange rates to trade imbalances, Professor Lee, how could this actually affect the overall tone and the outcome of the Seoul-Washington tariff discussions? And also, could you tell us what strategies should South Korea adopt to mitigate the impact?
Okay, so if the U.S. continues to tie exchange rates to trade imbalances, it adds complexity to the tariff negotiation going on between South Korea and the U.S. The U.S. may argue that a weaker Korean won contributed to the trade imbalance, pressuring South Korea to allow its currency to become strong. This could make Korean exports more expensive and less attractive in global markets, potentially hurting our export-driven economy. To mitigate this effect, South Korea should emphasize that it does not manipulate its currency, and that the won's value reflects market conditions. Additionally, diversifying export markets and investing in high-value industry may reduce reliance on any single market like U.S. So strengthening domestic demand may also help balance the economy.
Right, and also diversifying the market itself would be definitely helpful. Now, let's also touch upon the key rates, Professor Che. Given the significant differences between U.S. and South Korean interest rates, do you think the U.S. could actually pressure South Korea's central bank to adjust its policies? And if so, how would such pressure affect South Korea's monetary policy?
Yes, the U.S. might pressure Korea to raise interest rate or scale back currency market interventions. But if the Bank of Korea follows foreign pressure too much, it could hurt its credibility at home and abroad as well. For example, sudden rate hikes could slow Korea's real estate market and reduce consumer spending. So the best path is for Korea to base its monetary policy on domestic needs, inflation, and growth, as you know, and also strengthen currency swap agreement with allies to cushion any shocks happen in the market.
Right. So as for the BOK, this kind of pressure could create a real actual dilemma, especially with the current growth situation. Now, the U.S. is actually seeking South Korea's participation in the Alaska LNG project as part of broader trade negotiations. So what kind of potential benefits or risks does this actually present to South Korean businesses?
Joining the Alaska LNG project offer long-term benefit like securing energy supplies and building stronger U.S. and Korea ties. However, there are serious risks too. As you know, the cost of building infrastructure in remote Alaska are extremely high, and environmental regulations are becoming tougher and tougher. For example, if the global demands for LNG force or clean energy transition faster than expected, then Korean companies could face large financial losses. And so it's a very crucial for Korean firms to do very throughout the market and risk assessments before investing.
Right. So it means a very high cost. But what about the benefits, Professor? Could you point out for them again?
Benefit. So we can make a good relationship with the U.S., as I told you. And we can buy that, the energy, the LNG, the cheaper than the current, cost. Because, if we import that LNG from Alaska, the distance is shorter than the current, supplies. So that could be benefit.
Right. Thank you for explaining for us again. Now, there's also some concerning news. The IMF actually expects a 1.5% global economic contraction compared to its previous forecast before Trump's inauguration, which possibly is affected by Trump's trade policies. Professor Lee, how do you see this impacting South Korea's economy, and what specific strategies should the government implement to cushion the blow?
Yes, the tariff on the Liberation Day earlier this month made a big impact on the forecast of the IMF, not just on the stock market. South Korea is very sensitive to changes in the global economy because we rely heavily on exports. If the U.S.-China trade tensions continue, these countries are our largest trade partner, it will directly affect our exports and slow down our overall growth. In fact, the IMF recently lowered Korea's 2025 growth forecast to just 1%. This is 1 percentage point lower than earlier estimates, and the magnitude of contraction in the economic size is a lot larger in Korea than for the global economy, 1.5% you just mentioned. This revised number show that the global situation is already weighing on our economy. In particular, our manufacturing sector, especially electronics and automobiles, is very dependent on global supply chains and we also export like 1/3 of automobiles to the U.S. If the trade war drags on, production and exports in these industries could contract even further. To cushion the impact, the Korean government needs to some policies to strengthen support for export companies in particular. So possible measures like tax cuts or financial assistance may help business manage this difficult period. At the same time, it is important to diversify our export market, as I previously mentioned. Korea should work to build stronger trade ties with emerging regions like Southeast Asia, South America, and Africa, so we are less dependent on the US and China. Finally, I think most important thing is to invest more in future industry like semiconductors, AI, artificial intelligence, and biotechnology. These sectors can drive long-term growth and help Korea stay competitive in a changing global economy. To summarize, we need both short-term support and long-term planning to get through these challenges and build a stronger foundation for the future.
Right, that would definitely be helpful since, 1.5 figure-wise may not be huge, but in terms of, macroeconomic terms, it's a very serious warning. Now, shifting gears, just today, a few hours ago, Donald Trump Jr., the son of U.S. President Donald Trump, came to South Korea at the invitation of Shinsegae Group Chairman Chung Yong-jin. And during his two-day visit, he is expected to meet with top executives of major South Korean conglomerates. Professor Che, how would you foresee this visit kind of influencing business relations between the two countries in light of, the tariff negotiations?
And I can say that Trump Jr.'s visit is kind of symbolic, but very important, I think. While it won't directly change the tariff, negotiation or official policy, could strengthen, personal and also corporate networks between Korean and American businesses. So, for instances, it could open the door for future joint ventures, especially in areas like infrastructure, energy, and emerging technology like AI, right? And Korean companies should treat this visit as a strategic opportunity to build deeper business ties with a U.S. partner, I think.
And given the optics of this visit and who he's going to meet, it seems many would hope for some tangible, results and discussions. Meanwhile, actually, in a significant move, Trump has announced plans to separate tariff and defense cost negotiations. And from an economic perspective, what do you think is the strategic reasoning behind this decision? And how might this actually shift in approach influence South Korea's leverage in trade negotiations, Professor Lee?
Separating tariffs and defense negotiations give the U.S. more flexibility and stronger bargaining power, I think. By dealing with trade and security issues separately, the U.S. can apply pressure on allies like South Korea and Japan in each area independently, without letting one issue block progress in the other. Economically, this allows the U.S. to focus purely on trade benefits when they talk about tariffs, and to push for higher defense contribution separately based on security needs. So it's a way for the U.S. to strengthen its negotiating position by keeping discussion more targeted and specialized. For South Korea, this separation is not necessarily a bad thing. It actually reduces the risk of making concessions in one area just to gain benefits in another area. For example, we don't want to sacrifice security interests for better trade terms or the other way around. By keeping trade and defense negotiations separate, Korea has a better chance to negotiate the best possible outcome in each area, based on our own economic and security priorities.
Right, so not really a bad situation for South Korea under this decision. Now, given that Trump has indicated a fast-paced resolution to the tariff discussions, giving a timeline of less than a month. And South Korea actually is awaiting a snap election in less than 2 months' time. Professor Che, how should the current government under an acting presidency navigate its discussions with the U.S.?
The acting government must stay calm and clear and consistent despite that the political uncertainty. So first, the negotiation must focus solely on protecting Korea's national economic the benefits, interest, without being influenced by that upcoming election timeline, can say. Second, Korea should prepare flexible strategies such as one plan for a quick deal if talks speed up, and another for a longer negotiation if needed. And also, third, transparency is absolutely crucial, I think. So regular public updates can show both Korean citizens and a national partner that the core, the principle like a fair trade, the monetary stability and market openness will not change even under temporary leadership. And by staying steady and predictable, Korea will strengthen its credibility and bargaining position during this sensitive negotiation.
Right, so maintaining credibility, being flexible, and also being transparent to the public would be helpful. What about, I would also want to ask this question to Professor Lee. Are you on the same page with Professor Che?
Yeah, I think U.S. is in a hurry, but we are not. So the U.S. is pushing for a quick resolution because of the political pressure and unstable financial market. On the other hand, South Korea is a transitional period with an upcoming election, less than 2 months. So we can use this period to observe how other countries are handling a similar negotiation with the U.S., allowing our country to develop a more informed strategy. Based on what Japan did with the Trump administration so far, making earlier decision is not necessarily helpful. So the acting government can communicate to the U.S. so that the significant decision may need to wait until a new administration is in place. This can be a good excuse to make any agreements that have necessary political backing and public support. So we should approach the negotiation more cautiously, taking the time to observe other talks between other countries and to assess the implication of any agreement that's occurring in other trade negotiations.
Right, so being cautious and buying a little bit time for the incoming administration would be helpful. Now, these negotiations seem to be unfolding under extraordinary pressure, so whether Seoul can protect its long-term economic interests without a fully elected leadership now remains to be seen. But as of now, we will have to conclude our discussion for tonight. Thank you so much for your insights and for your time, Professor Lee and Professor Che. We appreciate it.
Thank you very much. Good night.
Thank you. Thank you.
And that'll be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Till then, stay informed and engaged.